celebrating 23 years of business leadership.
Stocks tread lower ahead of US inflation data and the FOMC meet next week, even as investors turn upbeat on China. Tech is the biggest drag, while FMCG and capital goods see some green.
Paytm informed stock exchanges that its board will meet on December 13 to consider a buyback. The proposed move after the stock declines to a fourth of its IPO price sparks a big debate.
Well, HCL Technologies tell investors that growth in the near term will be at the lower end of its guidance band. The move startles analysts. The stock is down sharply.
Automakers aren't cheering the record retail sales in November because of steeper than expected discounts, says Maruti. Even CV maker Eicher VECV is concerned about aggressive discounting that it hopes will abate.
All right, you're with us here on Halftime Report. I'm Prashant. With me, of course, my colleague Sonal. Sonal, hi. Good afternoon. I mean, it's all IT. I think we can safely blame it on IT stocks. It started with, of course, HCL Tech, but it has spread throughout the screen, heavily down. I mean, the IT index is down. The last I checked, about 3% now. Yeah. I mean, so that's as big as they come. HCL Tech specifically, as I said, but they're not limited to it anymore. It's across the board. Infi was down 3. There's TCS. There's, of course, the large caps, but not just large caps. The broader universe is down as well. It's like 7% knock. So just a couple of points before we kind of move forward. Almost all of the pressure on the Nifty is from IT stocks. I mean, actually, the top 5 largest contributors to the Nifty pressure is IT. There is one, the 6th name is Reliance Industries, which is just in terms of sheer index weight is contributing on the downside. Banks are doing well. PSU banks in particular. The PSU bank index itself, on the day is up about 1.25% so far. So that is interesting. In the last hour, it was, the ICICI's, HDFC, and the Axis of the world, which really powered Nifty, the Bank Nifty, to a new high. Gains have moderated a little bit, but, that's an index which still holds on. I think FMCG is the other one, and we can talk more about that later. It's doing well. Pharma healthcare is another area which is relatively doing okay. It's interesting, and we put this level out in the morning before market started. If you just map the recent fall, and it's not been that much, but if you just retrace this fall, the 38.2% retracement is basically today's high. We said the 38 and then the 50% are the two immediate levels to take out, really. We stopped at the 38, which is 18,665. That's a high for the day, and the market reversed. On the downside, the 20 days also moved up as the market has chugged along, and that now stands at about 14,488. Still some distance away, but not that much as well. But that's the real kind of golden line you don't want to cross because then sentiment really starts to flip out a little bit. So,
Hey, good afternoon, Prashant. Absolutely, that's an important level to watch out for, right? Yeah. At the lows. Of course, that is something from where we could see dips getting bought, but of course, that is something we'll track. As Prashant mentioned, it's really banking names which are batting for the bulls. IT under pressure because, Prashant, everyone was talking about growth fears in the IT space, but now HCL Tech has confirmed it. So that is something which is ruining the IT mood today. So that index down 3%. So let's do one thing. We'll continue this IT discussion and talk with another company, Datamatics, which is the stock on our radar today. The stock movement has been relatively flat this year. In Q2, companies signed new businesses worth $29 million, which is about 50% more than Q1. Companies confident of maintaining a growth of 15% in the coming year. Rahul Kanodia, who is the VC and CEO of the company, is joining us now to discuss the business outlook and what's happening in the IT space in general as well. Mr. Kanodia, good afternoon. Thanks a lot for joining us. Well, we heard from HCL Tech today that, yes, growth could be at the lower end of their guided band for FY23. What is your take? You have guided for a 15% growth rate in the year. Does that stay? Are you also seeing some sort of headwinds here?
No, we're not seeing any headwinds. As far as business is concerned, it remains robust, and I think we will stay with the 15% guidance. In fact, we're not seeing any slowdown in the new logo acquisition or customer new contracts. It's business as usual.
Okay, so in the last con call, you had said, and I quote, as explained in the last call also, we are maintaining our guidance for revenue growth at around 15% as of the moment because of many uncertain factors which are playing in the market. But having said that, it may grow beyond 15% levels as well. So, two-part question, what would those uncertain factors be? Something that HCL Tech has spoken about as well? And if not, will you grow beyond 15% as well?
The uncertainty, as you see in the US and European markets, because of the war, because of the oil crisis and things like that, we do see softness in Europe. However, from a deal flow point of view, we're not seeing any slowdown. In the US also, you see Twitter and Facebook and Amazon all talking about reducing headcount, cutting people. We are not seeing that in terms of our business. So business-wise, we're not seeing an impact. But because of the nervousness in the market, with all these large companies trying to slow down, there is some degree of uncertainty which remains, but we don't see on the ground any impact in terms of business.
That is good.
In fact, even in India, we don't see that impact.
Okay, that is good to know. But is it impacting the negotiations around price increases at all? Because you had spoken about being in conversation with clients about that. The uncertainty, no impact on price increases. And have you been able to get your clients on board with higher prices?
Yeah, in fact, most of the clients we've been able to go back and renegotiate. Most of them have given a price hike. It ranges anywhere from 4 or 5% on the lower side to even as high as 20% on some of the higher ones. But most of the clients we've been able to renegotiate prices upwards.
Okay, so 5 to 6% is what you said. I beg your pardon?
So on the lower end, it has been 5 to 6% hike in pricing, and the higher end has gone up to 20-25% as well.
Oh, okay, 20 to 25% as well. So in
that's not across the board. That's you know.
Yes, of course. That depends on clients as well. So in that case, what would do you maintain your margin guidance as well? 15 to 16% EBITDA, EBIT percentage at 12 to 13%, or will you be able to do higher than that? If at all, price hikes are better than what you expected as well.
Well, the margins would remain as we had projected because with the price hike, your costs have also gone up. And that is eroding your margins. So on the one side, you get a better price. The rupee has weakened. That is helping us, but the cost has gone up as well. So we will retain the guidance that we've given earlier.
Okay. Mr. Kanodia, one of the big highlights for Q2 has been your deal wins. Your deal wins were at $29 million in Q2, which is 50% higher than Q1. Going into Q3, which is almost done actually, and Q4 as well, do you think you will be able to maintain that run rate? Will you be able to do better than that?
I think Q3 Q3 is always slower because of Thanksgiving holidays, Christmas holidays. The industry tends to slow down. So Q3 is always slower than Q2. So we will maintain the same pattern. I don't think it'll be higher than that, but it'll be a similar cycle that we've experienced every year.
That is the same case for Q4?
Q4 we'll see a bounce back again. But again, Q4 is a little distance away. But yes, we'll see some bounce back compared to Q3. Q4 tends to be better.
Okay. So this is about the basic deal pipeline. But let's talk about your digital tech margins as well. Where do the margins stand there right now? Q2 margins improved marginally from negative 4.3% to a negative 2%. But this is a place where you are talking about betterment of margins as well. So did you see that improvement in Q3 and will that continue in Q4 as well?
Yeah, we do see improvement in Q3 as well. Although I'm not at liberty to give out the numbers, but yes, one does see an improvement, and we are tightening our belt on that. So therefore, the margins should improve. So
margins, when we talk about improvement, by when do you expect a break even when it comes to digital tech margins?
As I mentioned, we will certainly in this financial year break even. So we should. I will maintain that by March end we should certainly be in the break even zone.
Okay. All right, Mr. Kanodia, it was a pleasure speaking with you. Thank you so much for joining us and answering all those questions. So that's the word coming from Datamatics. They are not seeing any headwinds and they maintain that 15% revenue growth and are also expecting margins between 15 to 16% and EBIT margins between 12 to 13%. We'll do one thing with that. We will slip into a short break now. Up next, we'll get in more details and also get in Manish Raj Singhania, who's the president of Federation of Automobile Dealers Associations, joining us to discuss the November retail vehicle registration numbers. Stay tuned.
CNBC-TV18, celebrating 23 years of business leadership.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, the markets, they are still under pressure when it comes to Nifty. The broader market's doing well. But one stock that is in focus is Aptus Value Housing. The succession planning is on the anvil, says the founder M. Anandan on Big Deal. When asked on M&A, he did share that Aptus is open to it. CNBC-TV18's Nisha Pudar started by asking investor at Aptus Malabar Investments about the company's lack of leverage for growth capital. Listen in.
I think going forward, as the environment is getting more benign, it's very clear that the company has the ability to grow for next many years, for the next 5 years, despite being able to grow at, that 25-30% CAGR. The company doesn't need any equity infusion, and that puts it in a very rare sort of subset of financial companies who have the ability to grow at that rate without actually needing dilution. And so as a result, what would keep happening is that the ROE each year would keep inching up. And usually the price to book ratio sort of reflects that. And so I think as the company keeps delivering that growth and sort of higher ROE, and by the way, because the company is in this good situation and also because it's profitable, it has the ability to keep paying dividends without having to worry about its equity book. So it sort of positions it very well. And yes, at this point in time, the leverage is very modest. And as a result, ROE is not as good as what this business is able to deliver. But that's okay. It's still pretty good. And I think it'll keep improving from here on every year.
More cautious approach during COVID time. I take that point. But my only bit is that I've heard this from many promoters that when the money is cheap, pick it, even if you don't need it, because debt is now getting more expensive. But M. Anandan, one more important aspect. You have investors in the company, and like several other housing finance, there are a whole host of companies with private equity participation, and they become very good potential targets for mergers and acquisitions and also giving exit to the investors. What are your thoughts and strategy on that, and especially on the succession planning, if you can throw more light? And could that be one of the big reasons for a potential merger and acquisition going forward as well? Yes.
There are opportunities for mergers. If there are opportunities for, one will be open to look at it. But, but other than that, we will continue to see, we are really operating in a segment which is growing substantially.
Yes.
So we don't have to really look for small pieces, because every year we will be adding about going forward. Substantial as our base balance sheet keeps going up,
yes,
we will be adding substantial balance sheet ourselves. So we will be open, but we don't have anything specific to, share at this point in time. As far as the succession plan is concerned, yes, my actual existing tenure, is another 2 years. But the board is, already, started discussions, and we are hopeful of, getting, a person to succeed me.
Right.
In the next, much before, at least 1.5 years before the actual retirement.
All right, that's the word coming in from Aptus Housing Finance, but we do have the mutual fund data for the month of November, and looks like it's a big fall in equity inflow, so it's coming at around 2,224 crore rupees. That's the inflow this time, which compares with an inflow of 9,253 crore rupees in the month of October. October also did see a fall, but that is because September had a lot of one-offs, a few new NFOs that had also come to the fore, and that's the reason why the October number was lower than the number we saw in September. But looks like even the November number is much lower. It's around 2,224 crore rupees. So we'll have to figure out what really led to this. And the SIP number is something that we'll get to know only on the call. The last quarter or the last month, that number was around 13,040 crore rupees at a multi-month high as well. Apart from that, corporate bond fund inflow has come in higher at 3,466 crore rupees versus 1,500 crore rupees. Liquid fund inflow also has been higher. So it is really equity which is seeing a decline this time around. Debt funds could be maybe see an improvement because of rising interest rates, because that's what managers have been talking about, more flows coming in there. That's something we'll have to watch out for. But yes, looks like this has been a disappointment when it comes to the equities flows, so to say.
You know, Sonal, if you take a look at the last many months, if you knock out the SIP from the net number, the number was negative, which means lump sum money, which was going into equities, discretionary money, which you allocate, you come into some money and you want to put into stocks on a good day, that was going down. SIP, systematic investment, I mean, that was that's been very, very steady. But what seems to have happened is that, I mean, there seems to be more pressure. So if the SIP number is still around that 13,000 crores, that basically means that the discretionary number is deep in the negative now, right?
So that's
that is the one which is...
so SIP number is the key right now to understand.
SIP is the key. Will give us a better sense of, you know, how to read this. Apart from that, as I think you also mentioned, there are these one-offs in the sense if there is a scheme opening. I think that will reflect.
But even 2,227 crore rupees is much lower, right? In July, it was around 8,880 crore rupees. August was 5,900 crore rupees. Then, of course, that one-off that we saw in September. So it looks like it's at a multi-month low when it comes to equity schemes, the flow.
Sonal, Pavitra is telling us that November, the SIP number is steady. It's still 13,300 crores. This is,
okay.
So this is and we should put that up, the SIP flow. Compared to October's 13,040 crores in November, that number, if anything, has increased to 13,307. It's just that the discretionary number is now, I guess, has been negative for many months now, and that continues to be the case. Large cap funds, you know, so if you look at the AMFI sheet, they give you breakup between, you know, all kinds of schemes, funds categories. Large cap funds have seen an outflow of 1,050 crores, etc., etc. I mean, I think that nuance and data will keep coming. We'll keep putting out, but headline is SIPs absolutely steady as a rock, if anything up, but the lump sum discretionary flow that is fallen even more. We'll get you reactions with the mutual fund CEOs, etc. in a bit.
Maybe that's the reason people are not buying Mercedes, is it? But of course, that's the mutual fund data. We'll get you reaction on that, and we'll take forward this automobile conversation because we've got the retail data for the month of November. We have Manish Raj Singhania, who's the president of Federation of Automobiles Dealers Association of India, joining us now to discuss the numbers that we got just a while back when it comes to retail sales in the month of November. Mr. Singhania, good afternoon. Thanks a lot for joining us. Well, you know, we were having a conversation with the management of Maruti and Aisha today, who said that yes, while demand is going up, these higher sales are coming on the back of huge discounts, and that is something that they are worried about. What's your take? Do you expect discounting to continue or in fact increase from current levels?
So yes, definitely the schemes and discounts would definitely increase as the supplies are also increasing from the manufacturer side. And there are models which are kind of slow moving and medium moving, and there are models which are heavily booked with the auto dealers. So, and December being an year changing month, last month of this year, obviously passenger car dealers normally don't tend to carry forward the stocks of this financial year in the next year. So schemes have definitely increased for this month, and apart from that, all the OEMs, most of the OEMs have announced a price hike in January. So that's a very attractive scheme for the consumers right now for the December month, and it's kind of after post-COVID. It's after a long time consumers would be having a good hefty discounts in a lot of models of their choices for the December month. So it's a good time to buy their choice of product in December month with the increase. With the advent of price increase and the attractive schemes being given by the manufacturers.
Okay, all right. So you expect discounting to continue. This time around, this high number that we saw in the month of November was also led by the festive season. You spoke about wedding season also that led to these higher sales. What is the outlook? You stay cautiously optimistic. That's what you say in your release. What is causing this caution?
So, yes, though we are very much, the numbers are showing very good, but we can also see stocks also building up with the dealers. and the right model combination are still not available with the dealers. We just saw the order book of passenger vehicles close to around 8 lakh available with various OEMs. So they need to really supply the right combination, right variant to the dealers so that we can address the requirement of the customers. And though festives has been good and the wedding season has been good, and we are expecting that rural market is also reviving, and we are also seeing with the crops harvest money coming in the hands of the farmers, the rural market should be positive. So for a continuity, though festive has been good and November has been good, for a continuity, we see that that continuity should be for a minimum 3 to 4 months to completely and confidently say, yes, the market is doing well for the two-wheelers as well as passenger car dealers, especially in the entry-level segments, both in two-wheeler and four-wheeler. We could see the stress there, but overall sales has been good. So that means till now they have been performing good. And with in the coming 2-3 months, if they continue to do so, then we can confidently say, yes, the market of retail industry has totally revived or will continue to do well in the rural market. Q4 is also normally the best quarter for the auto retail industry. So keeping finger crossed and hoping that market continues to perform this way. That has been the performance in November.
1.5% has been the growth over 2019. That is the pre-COVID period. A ballpark figure, what kind of industry growth are we expecting this year?
So on a total, I should say it would be in a positive side, definitely. Passenger car has been performing very, very good. In two-wheeler, we could see growth happening from the month of August. Not before that. Two-wheeler segments and dealers were under stress. Passenger car has been doing good on a month-to-month basis, on a year-to-year basis also. And we are very confident passenger car would be registering all-time high figures for this financial year. And two-wheeler industry should also be on a positive side this financial year.
Okay, so 1.5% is expected or could be higher than that as well for the industry.
Yeah, definitely. Q4, as I already said, it's the best quarter normally the best quarter for the auto industry. So expectations are there.
Okay. And you spoke about inventories as well. Are they at a higher level? What are the inventory days currently?
So till now, we are okay with the inventories, both with two-wheelers and passenger car. The inventory is close to 30-35 days. In fact, in two-wheelers, the inventory has gone down. The supplies were much less than compared to retails. So there was a correction in inventory levels in two-wheelers, and obviously the month also went good. So the inventory level is at a comfort level. But the right mix of models is to be, ensured at the dealer's end, and that will also ensure that the consumer gets the right model at the right time, because we can still see a lot of news and a lot of models in high waiting period to 6 months, 1 year. Such kind of things should be navigated through, and their requirement should be promptly addressed by the OEMs.
Okay. Mr. Singhania, I also wanted to understand the supply side situation, because the management of Maruti did tell us today that yes, production is around 95% of the level seen earlier, but 5% is still impacted because of semiconductor issues or because of shortage of one or the other component for any model, so to say. Is that a big trouble still for the auto industry? And if that continues, do you think that will impact the supply chain going forward?
So right now, the OEMs have been able to kind of navigate through the semiconductor and various component supply issues quite well. And they have been regularly increasing the supplies of the vehicle. But yes, a couple of manufacturers for the December months have shown worry for the supply of various components or semiconductor for the December month. The heavy order books clearly shows the demand by the consumer is much higher than what manufacturers are able to give. So they need to really address all this heavy demands and heavily booked products, so that we can deliver, dealers can deliver the products. Within a limited waiting period, maybe 3-4 months is a decent waiting period for now. But anything above that is quite, it's a disappointment for the customers.
All right. Thanks very much for that. Appreciate you joining in, sir. Good getting some of that perspective. Sunil Subramaniam is now joining, and let's just sort of shift our gaze back to the mutual fund numbers, which at a net level for the equity category are a disappointment. So Sunil, of course, is CEO Sundaram Mutual Fund. Sunil, good to have you with us here. Thank you very much. So just over 2,000 crores. SIP number, though, November over October is still an increase. What do you make of the numbers?
Yes. I think there's been profit booking. I think because of the recent rally in the markets, I think a lot of existing investors have been booking profits because I think the fact that the world is going to recession, but Indian stock markets are beating a different path. While it's good news, it's also gives them a little bit of a worry in terms of is that the right direction for the market. So I think there's some bit of healthy profit booking, which I think is fine because they'll work on the sidelines and then probably wait for a right time to re-enter.
Okay. Okay, and so do you expect these kind of flows to continue in the equity space? Because these numbers are lowest since the time we have seen in April 2021. So definitely something different must have also happened this time.
The difference is that increasingly the US news in terms of the rate hikes and that the rate hikes are going to kill demand and bring on a world recession. And so certain segments of the Indian market, like the IT sector, the pharma sector, are essentially export-oriented, driven, auto components. So whether those valuations in the recessionary context need to be revised downwards. So there is that bit of uncertainty in the HNI investors' mind, which I think is saying it's probably right time to just book profits and keep it aside. And as we wait, we have 2-3 big events. We have the Fed meet later this week. Then we have the budget, union budget, which is coming up. So how is that going to play out? So I think that level of uncertainty is probably preying on investors' minds. So once I think the data comes out, and for all we know, the festival season numbers have been good. So the next earnings season starting from, say, Jan 10th should hopefully reflect a good, healthy thing. And I think that the flows should come back then. So I think they want a reassurance about the Indian economy not getting so impacted by the advanced economy's recession. I think that reassurance is what investors are looking for in the coming weeks, and their behavior would then be determined by that. So if you see, even in the hybrid category, traditionally the balance advantage and the aggressive hybrid have been positive inflow categories. This time they are also negative. So it clearly indicates that people are just waiting on the sidelines.
Suresh Soni, CEO of Baroda BNP Paribas, is also with us. Suresh, good afternoon. Thanks for joining in. Your first thoughts, Sunil says it's profit booking. Seems to be profit booking. How would you read the numbers?
I think it is too much to really try and evaluate month-on-month number. But if you really look at over the last 1 year, our equity AUMs have gone up by about 20%. It's about 3 lakh crores up. And similarly, in hybrid category, again, the AUMs have been up. So broader trends are up. SIP numbers have stayed strong. And month-on-month, there can always be a small amount of variation based on some amount of profit booking that can happen in a month or some amount of redemption that happens. But broader trend is very positive. We have seen the industry growing quite well. And this is the first time the industry has crossed 40 lakh crores. So that's a big number in terms of the overall AUM itself.
Okay, all right. Mr. Soni, Mr. Subramanian, thank you so much for joining us and telling us what the data for the month of November really means. So mutual fund data where equity flows have declined substantially this time around looks like it's profit-taking that we have seen in the markets this time. For now, we'll take a short break. Prakash Gaba will join in with some trading strategies on the other side. Stay tuned.
CNBC-TV18, celebrating 23 years of business leadership.
Okay, welcome back. I mean, there is another leg down which has emerged, and a sharp one at that. So at 12:30, just 5 minutes back, we were at I think, 18,560 or so. And we've lost about 50 points, just like that. I mean, very, very quickly. You can see that sharp drop there. Where is the pressure coming from? So just to take a look at the Nifty constituents, you've got IT, of course, which has been the big culprit. Maybe Reliance, if we can have the Reliance intraday, it's adding up some 15 index points on the downside to what the Nifty is doing. And then we look at the IT names as well. Yeah, it has. I mean, that's also come off, just like the Nifty has come off. Infi, HCL Tech, TCS, and Tech Mahindra. These are the other names which I think have sold off more. That's HCL Tech. Not really. I mean, there was down 7% when we started. Infosys maybe at the margin. And then there is TCS as well and Tech Mahindra, which have come off a little bit. Maybe at the margin, the banks, right? ICICI Bank and Axis Bank, even Bajaj Finance, these three cumulatively adding about 10 index points to what the market is doing. I think it is the banks maybe at the margin and Reliance, more than IT, responsible for the last 40 odd points that we have seen. By the way, we are now pretty close to 12 points away from the 20-day moving average as well. So it was looking very different when we started, but the gap has narrowed. 18,488 is the 20-day moving average as of yesterday's close, and we're getting there. Prakash Gaba is with us. Prakash, hi. Good afternoon. Good to speak with you. It's been a while. How are things looking, Prashant? Prakash, how are things set up?
Yes, Prashant, good afternoon to you. So far, the last 10 minutes that I've seen in Nifty, it's actually a breach. It's like, dam breach, kind of a waterfall patterns happened. And 18,563 is closed down. But now the 18,500 is the place where it can bounce if it has to. Now, if it doesn't survive 18,500, then I think we are going lower. This is a place if it has to survive. The place is just right, but needs to survive. Today being a Friday, it's opened as a gap up. Possibly we'll see a breach there. Because when I look at Nifty Bank, it tells me it's weak out there. It's broken yesterday. I think yesterday's close also is trading in the red now. Possibly we'll see lower level. And Bank Nifty has a support closer to 43,400. So if Bank Nifty has to come down, then Nifty will also have to come down.
Prakash, we are seeing Reliance Industries at the day's low right now. Bank Nifty, which was actually contributing to the gains, so-called, at least contributing to some of the gains on the Nifty, that is also just up 15 points as we speak. In a market like this, which has been very volatile, what would your individual technical picks be?
Yes, Reliance is the big culprit today. It's trading down, I would say that. Now, I would say that we look at Colgate. That's a defensive bet. Trading at 1652 Colgate. I would have a stop below 1640 and maybe trade Colgate on the long side, have a target of 1670. So Colgate could be traded on the long side. Some of the pharma names are looking okay. I would look at Glenmark. Possibly, yes, Glenmark should be okay, trading at 440. Next technical target is around 450. Stop below 435. So safe names, some place to hide is Glenmark and Colgate.
Okay, all right, Prashant, Prakash, thank you so much for joining us. I think, Prashant, you've confused me as well now. Okay, all right, that's a technical check on the markets. With that, we'll slip into a break. We'll get you more on markets and stock-specific action. Stay tuned.
CNBC-TV18, celebrating 23 years of business leadership.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18 from the broader markets. Paytm is the stock on our radar. The board says it'll meet on the 13th of December to consider a share buyback. Abhishek is here to tell us more.
Paytm has announced that they are considering a buyback, so for which they will hold a board meeting on 13th of December 2022. So cash and its equivalent in the balance sheet is around 9,182 crore as of Q2 FY23, which was around 9,411 crore as of Q1 and around 9,271 crore as of FY22. So remember that, around 8,300 crore is the proceed from IPO that they received in November 2021. The net worth is around 13,564 crore. Now, SEBI rule says that if you make a tender route buyback, the maximum you can do is 25% of the net worth. And if you do it via open market, the maximum you can do is 15% of the net worth. So if you take these two rules into calculation, the maximum buyback that they can do is 3,391 crore via the tender route, and maximum of about 2,035 crore via the open market route. Just to alert our viewers, the IPO was priced around 2,150 per share, and current market price does suggest that, you know, it's fallen about 75% from there. Back to you.
All right, Abhishek, thank you very much for that. So that's Paytm for you. HCL Tech, of course, is what has been in focus from the morning. At the US analyst meet, they've said that revenue growth is likely to come in at the lower band of their guided range. Rima is here with more. Rima.
Thanks so much for that. So HCL Tech held its analyst meet in the United States. The meeting got over only at 3:30 p.m. And over there, the CEO indicated that growth for FY23 is going to come in at the lower end of their guided band of 13.5% to 14.5%. Now, this came in as a surprise because just 2 months ago, middle of October, the company had revised their FY23 guidance higher, and now they've come out and saying the growth is actually going to be lower than what they had anticipated then. What led to that? The downward revision was driven by a higher than anticipated furloughs in 3 key verticals: BFSI, high-tech and telecom. Also, what the analysts gleaned from the management commentary, was that perhaps price hikes are going to be more selective and difficult to come by. It's only going to be for niche skills. This is not something that the management said categorically, but this was the implied takeaway from the analysts I spoke to. FY23 margin guidance has been maintained at 18 to 19%. So HCL Tech, needless to say, has taken a big knock today, the stock price, because growth is going to be lower than what the company had anticipated 2 months ago at the lower end of their guided band. But the 3 key verticals where they spoke about higher furloughs in Q3, BFSI, high-tech and telecom. Now, these are 3 very crucial verticals, and on an average, it contributes roughly 45 to 50% of the industry revenues. So this perhaps, what HCL Tech is talking about could be felt by the other IT companies as well. Take a look at the contribution plates for Infosys, TCS and Wipro as of the September quarter. For Infy, roughly contributes about 50%, while for TCS and Wipro, these 3 verticals is roughly about 45% of their overall revenues. Back to you.
Thank you, Rima, for that. And IT Pack is the reason why there's so much pressure on the Nifty. Has broken that 18,500 mark. Even the Bank Nifty is at the day's low as we speak, deep in the red, down 30 points. Time for a break now. We'll get our commodity segment with Manisha Gupta on the other side, who's joining with Ramesh Kalyanaraman of Kalyan Jewellers to discuss about gold demand trends. Stay tuned.
CNBC-TV18, celebrating 23 years of business leadership. Years of business leadership.
Welcome back. Joining us on the show is Ramesh Kalyanaraman from Kalyan Jewellers. Mr. Kalyanaraman, hi. Thank you so much for joining us. Well, there's plenty that's happening in case of the physical markets when it comes to gold. And, for a company like yours, there clearly is a lag from when you buy bullion to converting into jewelry, getting realizations for the same. So hedging clearly is an issue. What does Kalyan Jewellers do as of now when it comes to hedging?
Hedging, we have a lot of many instruments, like when we are on a gold on lease, wherein we work on a gold on lease from banks, wherein it has a automatic hedging embedded into it. That is a major source of hedging for brands like Kalyan. And yes, all these things will surely help us to further use such kind of instrument for our hedging. We also use forward contracts and options, etc. for our hedging.
All right. Also, when you look at the current season, which is the festival and the wedding season, how is it looking so far? Is the demand better than the previous year? And with the kind of price rise that we've seen in gold and silver both, which are, by the way, trading at an 8-month highs, has that impacted buying in streets?
Yes, so Diwali minus 30 days, that is how we see it was extremely good. we had updated in the stock exchange as well. We did a 25% revenue growth when compared to the previous year. And yes, as you rightly said, the gold price volatility is there, and it had a pause of 1 week on demand, wherein people wait for the price to just settle in. But as we speak, the demand is back, and we don't see any major demand change when compared to the festive.
All right. Clearly, the last quarter of every year is when you see maximum demand coming in. And as you said, that really seems positive right now. Your major thrust for the last few quarters has been on store expansion. Also, what is the sense? How have you done in 2022? And what is the guidance? What is the outlook that you see for 2023?
So 2023, we have a very robust pipeline of store expansion plan. Starting from January, if you look at the calendar year, we should be opening at least 52 showrooms in 52 weeks of the next calendar year. That is the expansion plan which we have laid. This is only for India and for Kalyan Jewellers. Over and above that, Candere as well as Middle East business, we will have some more expansion on those two verticals, which we will come back to you in, say, a month or so. So that's the expansion plan for Kalyan Jewellers.
All right, we'll wait for that, of course. But, with the budget around the corner as well, and as soon as the holidays get over, that is one theme that everybody will be speaking about. For last few budgets, we've seen gold being mentioned every time, whether it's about an asset class or a security of a launch of a new exchange in that sense. As Kalyan Jewellers, are you expecting anything from this coming budget?
No, so there has not been any major impact on our industry during budget, and we think that the government has done whatever possible for our industry. Hallmarking has been made mandatory. That is going to again shift the revenue, the customer sentiment from the unorganized to the organized, and we believe that this budget should be stable for our industry.
Okay. Thank you, Mr. Kalyanaraman. Thank you, Manisha, for taking us through that conversation. That's all about gold and commodities. With that, we'll slip into a short break and get you more on markets and stock-specific action after this very short break.
CNBC-TV18, celebrating 23 years of business leadership. Years of business leadership.
Welcome back. Well, this is not turning out to be a good Friday for markets, for bulls. The 20-day, of course, as we've been pointing out, is gone, which was at 18,488. I mean, it's not, too below that level, just 10 points. And what would matter is if the close is decisively below the 20-day moving average. I mean, it's entirely possible with the impulse which has been to try and buy the dip. It's possible that we see what we saw yesterday. There was a sharp recovery, sharp surge. I would say unlikely, but we'll see. Overall market breadth has also fallen. The Nifty Bank, which was in the green when we started at 12 o'clock, that has slipped. I would still think the PSU Bank Index is in the green. But again, I mean, it's a far cry. Things have changed quite a bit, have swung around quite a bit on the negative side in the last 1 hour or so. As I said, it's a bounce or break level, that 20-day, and the closing, more than anything else, is what's going to make the difference. We'll wrap up on halftime report. Stay tuned. Business Lunch coming up.
CNBC-TV18, celebrating 23 years of business leadership.